Hello, and welcome to the Investing in Uncertain Times virtual panel. With everything that's going on around the world and the uncertainty created by the COVID-19 pandemic and other external factors, we understand that investors may be unsure about whether they need to approach their investing strategy differently this year. Scotiabank polled Canadians about their concerns around investing, and they found that many of the same investment questions are top of mind for Canadians during these uncertain times. So today we brought together some of the bank's top experts across different disciplines to provide answers. And I think you'll find their responses at times quite surprising given everything that's changed this year. But no spoilers. I'm going to start by introducing you to our expert panelists, and I'm very excited to do so. First, we have Jean-François Perrault, SVP and Chief Economist. JF joined Scotiabank in 2015 as Senior Vice President and Chief Economist. He leads a team of economists to support Scotiabank's domestic and international business lines and clients from retail to capital markets, providing customers with perspectives, insights, and forecasts on economic, financial market, and policy developments. Prior to joining Scotiabank, Jean-François held prominent roles with the federal government, the Bank of Canada, the International Monetary Fund, and the World Bank. Next, we have Judith Chan, Portfolio Manager and Director, Portfolio Solutions. Judith is an accomplished portfolio manager with more than 15 years of experience in multi-asset portfolios, specialized in asset allocation, portfolio optimization, investment strategy design, and portfolio advisor selection and due diligence. Judith is currently managing over $40 billion in assets under management in multi-asset portfolios that are consistently delivering best-in-class risk-adjusted returns and value proposition of each portfolio. And last but certainly not least, we have Iris Gu, Financial Advisor. Iris joined Scotiabank in 2019 as a financial advisor, investment and retirement planning. She has 5 years of experience in the financial services industry, and with a clear understanding of her clients' unique situations, Iris provides each client a tailored investment strategy that helps them reach their financial goals while maximizing their wealth. Iris holds an honors Bachelor of Science degree from the University of Toronto and is currently in the process of completing her MBA with the Rotman School of Management at U of T. And I'm Sandra Martin, the Editor-in-Chief of MoneySense, and I'll be your moderator today. For more than 20 years, MoneySense has been a trusted source of investing and personal finance information for Canadians, and we're so proud to be a part of today's talk. One final note before we get started is that today's session will be closed captioned in English and in French for everyone to refer to. So let's kick things off. I want to start with you, JF. Overall, how is the Canadian economy doing given the COVID-19 pandemic?
Well, listen, we're doing kind of as you'd expect. We're going through a massive economic shock. The virus had significant downside effects on the economy. Growth fell for the year, but that's kind of the backward-looking part of the story, and it's not all that unusual. I mean, what we're focused now is on the recovery, and the fact that the economy has turned around very significantly in the third quarter. The fact that we continue to think the economy is going to, will continue to strengthen, if you will, as we go through 2021 and even beyond. And the thing to keep in mind is we are living in, as I think everybody understands, extremely uncertain times, right? And this is kind of our first turn at the table, if you will, with this pandemic. It scared a lot of people. It scared a lot of businesses. But these things happen on a regular basis. Like these very unusual events happen on a regular basis, right? You can go back to the Great Financial Crisis. You can go back to the World Wars. You can go back to the Great Depression, oil price shocks. There are very frequently these very unusual developments that happen that affect the economy, that affect how we think about things, that affect markets. The thing to keep in mind is that, we've lived through all of these things and we know that we get out of them at some point in time, right? So if your perspective is long enough, if you're patient enough, things go back to where they were, right? The economies recover, markets recover. And that's the important thing for folks to keep in mind as you think about kind of the planning horizon. We are going to get out of this, and we are getting out of this. It's just a matter of how quickly that happens. Now, as we kind of manage our way through, it doesn't mean that everything is going to be hunky dory for everybody. Clearly, as I said, this is a big shock. It's a shock that affects how people interact with each other. So you've had industries, those that are more socially dependent on social interactions, like travel, accommodation, restaurants. Those are industries that are, quite honestly struggling and will continue to struggle for some time, even if we have a vaccine, which obviously is fantastic news. But for other industries, there are lots of these. These are really good times. You can think of the e-commerce side. You can think of the real estate sector. You can think of home improvement stores, retail stores, a lot of technology companies. These are industries that have thrived through the pandemic and will continue to do so. So, the perspective matters on these things. We're on our way back. Could be a little bit more rapid, a little bit more slowly than people would want. Some industries are going to do better than others, but bottom line is, and history is a very good guide here. We're going to go back to, a good state of the world at some point in time, and one in which, markets are going to continue to do well. And in fact, we've already seen markets respond quite favorably to developments over the last few weeks. And that is, that's in line with how things usually work out.
Okay, so if I can replay, JF, what you're saying is we're not at all in uncharted territory and that the economy is coming back to life. But we need to keep in mind that a full recovery will take some time, and also that some industries or economies might recover quicker than others. But Judith, I want to turn to you now to build on that with our next question. With the evolving impact of COVID-19, would you suggest that Canadians approach investing differently at this time in order to manage those ups and downs that JF was speaking of?
Yeah, so there has been a large disconnect between the economy and what we've seen in the financial market performance in 2020. Volatility has obviously increased, and we've seen a wide dispersion of returns between geographies, asset classes, industries, and securities, making it very difficult for average investors to navigate. But with the unevenness of the economic recovery that JF just talked about, the competitiveness of many companies, as well as their long-term growth potential, has changed. So it's now very important, and it's more important than ever for portfolio managers to actively evaluate the growth prospects of the companies in their portfolios. And what that means is that instead of investing broadly across the market segments, we need to be more selective and invest only in companies with strong long-term growth prospects. And that's what active managers do.
So, Judith, it sounds like your team understands the level of volatility and uncertainty that we're seeing right now. And despite the pandemic being new for a lot of Canadians, you're already managing accordingly. You have been managing accordingly for that volatility. Iris, I want to turn to you next to find out, what have customers been saying? What are you hearing from your customers? And what advice have you provided to them to help them manage those ups and downs?
Thanks, Sandra. Yes, market volatility has been a concern for quite a few of my customers. In our conversation, I encourage my customer to take a step back from the headlines and refocus on their individual plan. Many of my customers have invested in a portfolio solution, which are designed to manage the impact of market volatility by having experts like Judith ensure they have a proper diversification, which helps protect them from those up and downs.
And Iris, why is it important to have a financial plan?
Overall, the key is to work with an advisor to identify your unique goals and then develop a financial plan that addresses both your short-term reality and long-term objectives. Everyone's plan is unique and tailored to their personal needs, which helps build confidence during a certain time. It puts you in the driver's seat and reduces stress caused by the headlines and market up and downs. By building a plan with an appropriate long-term time horizon and reviewing regularly, you can feel more confident in riding the up and downs that we're seeing right now and which we have seen before.
Well, thanks to you, Iris, and to you, Judith, for explaining why customers should not invest differently despite everything that's going on right now. They should instead continue to build that long-term plan and work with an advisor based on their broader goals for the future and looking at their own current situation, which will help manage volatility. I want to stay with the two of you for the next few questions. So turning back to you, Judith, what financial or investment opportunities might exist even amid this crisis caused by the COVID-19 pandemic? And how can Canadians take advantage of those opportunities?
Thanks, Sandra. Markets are very often volatile, and we've seen the same in 2020. But our investment approach to managing portfolios hasn't changed as a result of the pandemic. Diversification continues to be very important, and diversifying across a wide variety of investments in countries, in different industries, and different investment styles is more important as ever for your long-term investment success. And diversification can also help reduce the impact of the stock market declines, like what we've seen this year. And investors who has a diversified portfolio in 2020 typically saw less downside than the broad market, like what we had earlier in the year, and they still participated in the market rebound recently. And so we continue to invest in high quality, established businesses with a sustainable competitive advantage in our portfolio. And this is particularly important now, as some companies will likely to be more successful than others coming out of the pandemic. But while the market is very fluid right now, we're still focused on adding value over the long term. And investment success should be measured over several years, not days and not months. And COVID-19 hasn't changed this. So one of the things we don't do is that we don't chase winners and sell losers just because of their past performance. We need to evaluate. And given how unpredictable the market environment is, we certainly can't time the market. And we give the same advice to our investors. And just like what JF has mentioned, markets typically go up over the long term, but it's never going to be in a straight line. So as portfolio managers and investors, we need to have patience and maintain a long-term perspective. And we're usually rewarded for that. So the most sensible approach for investors is to align your investment decisions to your time horizon. By choosing the right asset mix, the mix between stocks and bonds, to suit your time horizon, your goals, and your risk tolerance is one of the most important decisions that you can make.
Well, thanks, Judith. I think a lot of Canadians will be relieved to hear that the things that hopefully they have been doing are the things that they should be doing going forward. So maintaining diversification, keeping a long-term view on their investment strategy, those are important things for investors to do right now. So turning back to you, Iris, and given what Judith has been saying, what are you telling customers who come to you looking for help with what to invest in right now and who might be a bit confused?
Our advice now is similar to what we normally recommend, which is we advise our customers avoid trying to time the market. A long-term approach is better over time. Markets don't really shape what solutions I recommend for my customers. Great investment advice will always be taking a long-term approach with a professionally managed and diversified portfolio solution. I work with my customer to understand their unique goals, time horizon, and risk tolerance levels to ensure I recommend a portfolio solution that fits them best. We also stress the importance of continuing investing as a best practice and often recommend pre-authorized contributions so you can continually take advantage of dollar cost averaging, which is a strategy to help reduce the impact of volatility on the overall purchase.
Okay, so if I'm understanding you both correctly, the key to success at this time is the same as the key to success at regular times, which is not to try to chase winners. And instead, you build a plan, contribute regularly, and stick to that plan over the long term. Iris, staying with you, we've learned that Canadians who are approaching retirement might be concerned about this life change happening at such a volatile time. What are some of the key considerations for those who are thinking of retiring soon, given the uncertainty caused by COVID-19?
As an advisor, I work with my customers to ensure their financial and retirement plans stand up tall in the face of uncertainty. If my clients are retiring soon, the plans will reflect an appropriate mix of investment that would allow for current volatility. It is important that we remind customers what we are experiencing in the market is not new. Markets have been volatile before and then they will be again. Strong plans, disciplined investing, and diversified solutions are the key. For anyone who is approaching retirement without a written plan, I would start there at the beginning with a proper planning process. Advice needs to be personal and specific to the client. It will be against my process to provide recommendations before I complete a strong assessment of the client's specific circumstance. That said, it's a good practice to continue review your plan, and it's especially important that you take a more holistic view of your plans when big life events are on the horizon. Customers should review their investment strategies, insurance coverage, and estate plans.
So this sounds like another great example of the importance of talking with your advisor and creating and regularly checking in with that plan that we talked about earlier. So particularly when there are important life changes to your life, you know and you have confidence that you're on a path that makes sense for you at that point in time. So staying with you, Iris, I'm wondering about Canadians who are dipping their toe in to investing for the first time. So Iris, what do you suggest those who are just getting started with investing, for them, what's the best way to start? What should they do, and should that approach change given the circumstances of the COVID-19 pandemic?
For people who are just starting to invest, they should start with a simple conversation with the advisor to set up a goal, plan a contribution, and remain disciplined with your plan. If you feel comfortable, go online and do a little research beforehand. Scotiabank has just launched the ScotiaAdvice Plus Center. It's an interactive hub with step-by-step guides for getting started with financial planning and investment. It also has a tool that you can complete to determine what type of investor you are and what your risk tolerance is. We are also seeing record number amount of people holding cash and waiting to time the market or unsure what to invest in, which means they could be missing out as the market rebounds. It can become overwhelming with so many options to choose from. Bonds, stocks, mutual funds, GICs, and so on. It can be difficult to figure out where to start, which is when an advisor can step in to help. A good thing to consider is putting some of that money to work for you versus keeping on the sidelines. Simply put, those new and old to investing should commit to investing principles. Invest earlier, invest often, stay invested, ensure you are diversified. Setting up a pre-authorized contribution is a great way to put this plan into action, so you don't have to worry about it.
Yeah, everyone's objectives, time horizons, and risk levels are unique to them. So it sounds like the key is to just get started, have that simple conversation with an advisor to kick things off, and understand that the advisor can help you create a plan that's right for you. And keep in mind that this is not a one and done conversation that you have, that you need to be aware that you're checking in regularly with your advisor to ensure that the plan is still working for you and to make any necessary adjustments as your life changes. So Iris, keeping on that theme, what are your tips to find financial balance between saving for the future while still living your life today? So you're not just putting everything on hold so you can keep that plan for the future going. How do you do that and keep that balance as we head into the unknowns of a second wave?
So this is a reality for many customers I've been meeting with. They want to save for the long term, like their retirement. But the reality is we all have things that come up unexpectedly, or smaller short-term goals like vacations, new cars, and so on. My customers also have their own unique personal circumstances, and some are better or worse off as a result of change of income or spending from the pandemic, all of which emphasize that importance of having a plan tailored to them. What COVID has shown us is the importance of having an emergency fund, and also ensure you have protection in place in case of unexpected events like job loss and illness. This was a tough lesson for many customers. I always go back to the basic. Have a budget, think about how much you are spending and what are your priorities for your life stage, and have savings you can easily access for emergencies or bigger expenses so that you don't have to dip into your long-term retirement savings, and the right insurance coverage to protect your hard-earned savings.
Finding balance in the midst of everything that's going on is something I know a lot of Canadians are struggling with. And it sounds like, Iris, it's important now more than ever to talk to your advisor, to review your saving and spending habits, to see if you need to adjust your financial plan and get some help to find that balance that we're all seeking, given your current situation. And it sounds like it's also important to stay invested so that you can reach your long-term goals despite what's happening now. JF, I want to circle back with you. We started talking to you first to get a look back on the economy. So before we wrap up, I wanted to ask if you have any final words on the long-term outlook for the economy as we look forward.
Yeah, thanks, Sandra. Listen, I mean, there's no denying the fact that we're going through, a bit of a challenging time, or a very challenging time, depending on how badly you've been affected by the virus. A lot of folks unemployed. The virus is, creeping up here, there, and everywhere. So there's been a lot of bad news. But, when you kind of scratch below the surface a little bit and you consider a few key things, I think you can have a bit of a different perspective or have a little bit more sense as to where we go from here. So one of those things, obviously, is the vaccine. We'd always thought a vaccine was going to come into play, and it has. And now it's not going to get rolled out in the next couple of weeks, but certainly it suggests that as we go forward, this light at the end of the tunnel is getting brighter and brighter. So that's a really important thing. The second is, and this is also very important, I mean, we've seen, as I said, a pretty significant rebound from the post-COVID kind of lows it's seen in the second quarter. That's already in play. Part of that's been facilitated by massive amounts of government support for firms and households. So the governments have really stepped up to try and minimize the shock to the economy, and it's been pretty successful in doing that. There is reason to be more optimistic, much more reason now than there was even just a couple of weeks ago or a couple of months ago.
Yeah, really things have changed so quickly over the last little while. And for individual investors, based on what you're saying, JF, it sounds like keep calm and carry on is the main message for them to take away, that Canadians should keep in mind that things will be okay over the long run. So while the pandemic has changed much of how we're living at the moment, I found it very interesting to hear from our experts today that the basic rules of investing stay the same as they go beyond the current events causing volatility. In many ways, the advice to investors is that they shouldn't be investing any differently this year, despite everything that's going on, and that the tried and true rules of investing still hold true. And what we've heard today is that those are, you should create a plan and stay the course. That's the best long-term strategy for weathering market volatility, whether that's COVID or something else that comes up in the future. And of course, talk to your advisor. Your advisor can help you personalize a plan that works for your situation and your individual needs. So before we wrap up, I wanted to, of course, say a big thanks to our panelists who've given us such excellent advice and background. We have Jean-François Perrault, Judith Chan, and Iris Gu, who have given us incredibly valuable insights today to help us navigate uncertain times as Canadians. And of course, I want to thank everyone who joined us here today. Take good care of yourselves and your families.
Thank you, Sandra.
Thank you, Sandra.
Thanks, Sandra.